guys, welcome to my compound life. I am Jonathan. Good to see you all today. The time of recording, it's the 25th of January 2026. It's around almost 1 p.m. in the afternoon in the UK, in West Midlands. So good morning, good afternoon, good night to wherever you're watching my video. Okay, so this is another episode of Bitcoin Daily. I'm in a very different setup these 2 days, so I hope you guys don't mind. So I don't really have access to charts or anything as such, so it's just me talking to you guys. I hope that's a little bit personal too, make the whole experience a little bit personal. Yeah, so if this is your first time watching this video, I make video almost on a daily basis. So I'm a small content creator. Okay, so any chance if you guys can hit the like, hit subscribe, that can really be beneficial for my channel so that more people, like-minded people, can discover my channel more, right? And I think, I talk about Bitcoin a lot, but my Compound Life, it's a channel where we build assets. It can be any asset apart from Bitcoin. I mean, I'm into properties, real estate. I'm into stocks and equity. But this time around, of course, you're watching a Bitcoin video, right? So we build assets, we build habits that, help us to manage all of our asset. And whenever it comes to Bitcoin, all I talk about will be build a hodl bag for Bitcoin as well as building a swing bag for Bitcoin. Hodl bag, you never sell. Swing bag, you kind of buy low and sell high. And of course, we build freedom. That should really be financial freedom, time freedom for you, me, and anyone else that watches my video. So let me know in the comment section, right, where you guys watching from. It's always good to hear from viewers where you guys watching from. I take all sort of feedback, whether you like me or not. So drop me a feedback. It's always good to hear from all of you guys. Okay, so at the time of recording, Bitcoin price right now is around 88,600. So not good. I don't think it managed to latch on to the previous support that we've called out around 90,500. And it does seem it is continuously dropping. Okay. So I think we are essentially back to where we were, sometime in December, late December. Okay. So yeah, I think that's the whole situation for Bitcoin. And of course, the fear and greed index, we kind of back in the fear zone. Initially, I was expecting things might, things might change. We might head up slightly higher. It's always good to get back to the 200 days moving average at around 100,000. But I think at most we somehow touches at around 95,000. That was, I think, sometime last week, Wednesday, Thursday. But we never quite, break that 95,000, I'm afraid. So FYI, I think if this is your first time watching my video, I try not to be too bearish, but at the same time, I need to give you guys an overview of the bearishness, not overview of the bearishness, but overview that if Bitcoin follows a 4-year cycle, historically for the past few cycle, at least, I mean, this time around is the 4th cycle, right? At least it will take approximately 1 full year to get to the Bitcoin bottom from the recent all-time high, right? So every time after the all-time high, it would take about 12 months to get to the Bitcoin bottom. And that year will be considered as the bear year, right? And then afterwards, you get at least 3 years of growth year, 3 years of bullish years, right? So if we take the recent October 8th, around $126,000 worth of Bitcoin as the all-time high for this cycle. We are already 3 months plus, in this current bear cycle, right? In this current bear trend. And usually, if Bitcoin does follow through the 4-year cycle, essentially by sometime in November this year, it would mark about 12 months. So that would be a good time to re-enter, right? So I'm just thinking out loud, just do your own research. This is not financial advice for you to buy or sell Bitcoin, right? But of course, there are things to take into consideration, like the coming rate cut announcement. There could be the business cycle, ISM cycle, M2 liquidity. Gold always runs first before, Bitcoin runs after. So there are a lot of this sort of point of view. But as a channel for My Compound Life, I'm just trying to manage everyone's expectation just so that, we do the right things, whenever we have to take and protect our capital, take profits, these are like the time, that I will emphasize to taking profits and not be too bullish so that, we miss out on certain windows, right? So I think My Compound Life, it's essentially just to give you guys highlight in terms of how I think the market is progressing, and we kind of take into consideration of the different probabilistic outcome, and we try to, maximize our gain through profit taking and minimize our losses by getting out of the market in crucial moments. But anyway, there are a few things that I'll be talking about this afternoon. I think a few important news highlight that I think all of you guys need to pay attention to. It's not to FUD or to, to call out market potentially crashing. But at the same time, I think these are crucial macro news that will affect the outcome for Bitcoin price, right? And looking at the current Bitcoin chart, I think although the fact that we are trending lower, but it does seem, we are trending lower. Initially, yesterday looking at the chart, it does seem that we may be expecting a breakout. But I think the breakout, it's essentially now that, we are going lower. But never mind. So what I want to talk about are a few important news that I think will kickstart next week. Probably not too much for the upside, but more towards the downside. Okay, so let's start. Okay, so news. So let's enter the section news that will affect Bitcoin price. Okay, so I think all of you guys are aware of FOMC meeting taking place next coming Tuesday as well as Wednesday. So I think market has already priced in with no rate cut. Even poly markets, I think it's already predicting that there could, that there wouldn't be any rate cut coming. So yes, I think pretty bearish for the Bitcoin price. But you never know with so many things going on, it could change, right? But anyway, I think that's already priced in the Bitcoin price. So this is just a FYI, not a major news for you guys to, to be fully aware of. And the second thing, right, that I want to cover, will be Bank of Japan rate rise leading to the Japanese carry trade unwind and what's happening next, right? So I've been covering this a lot, I think since last year, right? Been calling this out, and And I've informed you guys that, although it's in the news headline, but you wouldn't be able to see much of an effect until much later, because, it's a little bit like House of Cards, and then things will cascade eventually onto all other sectors, right? So what exactly happened here and what are some of the next steps? It's what I want to call out right now, okay? So big news out in the US and Japan right now. The Federal Reserve, specifically the New York Fed, has started doing what's called the rate checks on the dollar-yen exchange rate. So this is the exact first step they take before actually stepping in to intervene in the current in the current currency markets. Okay, so what does this whole thing mean, right? It looks like the US is getting ready for the first time in century. That I don't think they've ever done this for at least for the past few Japanese carry trade implodes, right? So this is like the first time this century to sell US dollars and buy Japanese yen. Okay, so in simple terms, they're preparing to make the yen stronger and the dollar weaker, right? So this is super rare. Like, it never quite took place in the past, even for the past few Japanese yen carry trade problems. And when it really happens in the past, global market have often reacted strongly, usually in a bullish way for risk assets. Okay, so that bullishness will not come immediately, guys, right? So I need to caveat that it's not going to happen immediately next week, but it's more of a FYI for now. Okay, so have that at the back of your mind. Okay, so why is Japan in the spot of doing this, right? So how did Japan actually get into this dire straight situation? So the yen has been really weak for years, and of course Japanese bond yields are at multi-decades highs right now. So the Bank of Japan is staying pretty hawkish, and all this is putting serious stress on their economy and even ripping out of the global markets. I think it's affecting the US, Germany, France, not so much in the UK, I don't think. But anyway, I think it's having a major effect globally, right? So this is why central banks are paying close attention now, right? So I think even in Davos, I think President Trump, had to step in to actually say that, hey, all of the equity prices kind of, went down. It wasn't due to the Greenland tariffs, but it's more towards the Japanese yen carry trade, right? So this is what you guys need to be aware of. Okay, so Japan has tried to defend the yen on its own multiple times. It's not as if they just let it go haywire. They obviously did try to do something. So back in 2022 and 2024, but those solo effort by the Japanese, Bank of Japan never quite last that long. Okay, so the one in July 2024 only gave a short boost. Okay, so it's still having an effect. So this time round, right, it's definitely having an effect. And so the speculation will be nothing that the Japanese government or bank can improve on that situation anytime soon, right? So history shows the pattern clearly. When Japan acts alone, it usually fails, right? But when the US joins forces, the coordinated action between US and Japan, and it usually works that way. Okay, so similar happened before in the past. Back in 1998, during the Asian financial crisis, Japan solo tries obviously flopped, but when the US stepped in, the yen stabilized, right? So even bigger example, 1985 Plaza Accord, where major countries, including the US, worked together to weaken the dollars. And the dollar dropped almost 50% over 2 years. That move supercharged gold, commodities, and non-US markets, right? So it kind of explain why gold, silver, the metals are doing so well right now. If this intervention actually happens now, here's what it would mean, right? This is what you and I care about, right? So dropping some golden nuggets here right now. So the Fed would have to create new dollars, right? Sell them in the market and use the proceeds to buy yen, the Japanese yen. That will weaken the dollars overall and pumps more liquidity into the global system, right? Not in the US system anymore, into the global system. Whenever the dollar gets intentionally weakened like this, asset prices, stocks, crypto, you name it, anything that are asset related tends to surge higher in the long run. Okay, so now let's talk crypto and Bitcoin specifically, right? Because Bitcoin has one of the strongest opposite moves to the US dollar. When US dollar weakens, BTC usually rises. It also has a very, very strong positive link to the yen right now. The correlation between BTC and yen is like near all-time high. Okay, so there's a short-term catch you need to watch, right? Huge amount of money, hundreds of billions are still in the yen carry trade. So people borrow super cheap yen and invest it in higher return stuff like stocks, crypto, you name it. If the yen suddenly gets much stronger from such intervention, of course, those traders get squeezed, right? They'll get liquidated and they'll have to sell asset fast to pay back the yen loans. Okay, so we saw exactly this back in August 2024. A small Bank of Japan rate hike strengthens the yen a little bit, and Bitcoin dumped hard from 64,000 down to $49,000 in just a matter of 6 days. So crypto lost about 600 billion in market value due to that sort of panic. So yes, sudden yen strength, the Japanese yen, currency getting stronger, it means short-term risk and possible dips for Bitcoin, crypto, even equity markets for the growth stocks. Okay, so bear that in mind. There could be a short-term dips coming, and this dip can be quite a steep one. I've actually got a viewer, Macker89. He obviously stated that he's anticipating a dip coming. This could potentially be one, and this will give him the opportunity to DCA. So I reckon, this could also be the black swan to bring us down to the Bitcoin bottom for this cycle. But you never know. I'm just an internet guy. I have a lot of assumption, by the way. So the bigger picture is more bullish, obviously, right? So it has to dip. There will be plenty of sell-off that eventually will lead somewhere, right? So there will be so much sell-off that the weekends, the tourists will all leave, and gives us the opportunity to buy the dip, and then we can come back stronger, right? So the bigger picture is more bullish because dollar weakness, long-term upside for Bitcoin and crypto. Okay, so Bitcoin is still well below its 2025 highs right now. It's one of the few big asset that hasn't fully priced in this kind of currency debasement and liquidity flood yet. Okay, so if we get real coordinated intervention and with the dollar weaken, money will definitely flow into asset that look cheap, for instance, Bitcoin, growth assets, and so forth, relative to the macro shift, of course. So yeah, so I think stay tuned. I'll keep you all up to date. I'll be watching this closely. If it escalate, it could be massive for us holders to maybe buy the dip, and for me to remind you guys not to panic sell, for me to inform you guys not to jump ship, right, and to get into other asset like metals, gold or silver, right? So yeah, so let me know what you guys thinking. Do you think this can potentially be the black swan that drag us down? Let me know. Yeah, or let me know, are you bearish or bullish, short term to long term? Always keen to hear from you guys. Let me know in the comment section. Okay, so moving on to the second news that I want to chat about quickly. I think since we are nearing the end of January, this potentially can play out. So the US government may go on another shutdown pretty soon. Okay, so I've checked on poly markets today. Yeah, not good. Maybe I'll show you screen grab. That's the only screen grab that I can show you, right? So poly market traders are pricing in about 77% to 79% chance of another US government shutdown happening by January 31st. Okay, so that's pretty soon. That's like next week, guys. Yeah, next week. So I'm covering this just so that all of us are aware of the situation, and potentially it's an implication of why Bitcoin is dipping right now, because there are so much uncertainty right now. So what's happening, right? So the market, so what's causing this drama, right? So the current federal funding from a previous continuing resolution expires at midnight on January the 30th, 2026. Okay, so that's sometime next week. So if no bill or extension passes, non-essential government operations shut down starting on the 31st of Jan. Okay, so the House already passed a big package of spending bills around 1.2 trillion, covering defense, homeland security, DHS, and many others, right? But now it's in the Senate, and Senate Democrats, led by folks like Chuck Schumer, are threatening essentially to block it. So the main trigger, a recent fatal shooting in the US involving Border Patrol ICE agent Alex Pretty. Okay, so which I think kind of pissed off the Democrats. Anyway, the demanding restriction on ICE funding or stripping and enhancing limits in the DHS portion of the bill. So without their votes, it could stall completely. So Republican and some Trump-aligned voices are calling it a Democrats' shutdown over immigration enforcement. So I reckon it's all politically driven agenda, as opposed to anything else. So I think immediately next question is, how likely is this actually happen? I think prediction market like poly markets are often pretty accurate, 77-79% yes. So bear that in mind. And I think something definitely to watch out for, as especially for us that are holding Bitcoin as well as growth stocks, equity, etc. Right? So short term there will be heaps of volatility risk. Remember the last time the government shut down back in October, right? And essentially liquidity just dries out, right? So shutdown, create uncertainty, market hates that. I think could essentially drive gold and silver another notch. So in the past ones, we've seen dips in risk asset like Bitcoin, liquidity tightening, data goes dark, which will definitely defer more rate cuts in the coming years. And fear spikes. So crypto could see a quick sell off if this hits, right? So I'm kind of sensing that crypto, Bitcoin is facing that sell off right now. Okay. But of course, the purpose of me in this channel is to remind you guys not to panic sell, your hodl bag, right? These are often buy the dip moments, buy the dip opportunities. So yeah, and if you're long-term bullish, right, on Bitcoin, the fundamental, guys, just follow the fundamental, all is good. Okay. Yeah, just continue to hold steady, avoid any knee-jerk reaction. Hopefully none of you guys that watch my video are on leverage, so you guys should be fine. Yeah, I think big drama about to uncover next week. Plenty of Japanese yen carry trade unwind, possible government shutdown, no FOMC. Okay, there will be a FOMC meeting, but followed with no rate cut. I think that's a huge probability. So sorry guys, I can't bring you guys any better news for Bitcoin. I know it's frustrating. I'm frustrated too, but rather than being frustrated, all I can say is, you know what, the hopium will be fundamentally, it's still the best asset out there, and we simply just have to stay strong. And historically, as I've mentioned right at the beginning of the video, right, this year should be a bear year, right? There are a lot of speculation or call out that this Bitcoin cycle is turning into a super cycle, right? But I want to manage all our expectation, right, that potentially this year should really follow the 4-year Bitcoin cycle, and this should be a bearish year, and the pain will end, right? The pain will end by this year. I think still a very long 11 months away, but this pain will end gradually and eventually. Okay, so other interesting news to call out. Okay, one interesting news to call out. A BlackRock executive is now the leading contender for the next Fed chair. Okay, so this is pretty massive update about the Fed chair race eventually, right? Hang on, let me just. So what's happening is BlackRock's chief investment officer, Rick Ryder, has surged to a leading contender to replace Jerome Powell, with prediction market, Polymarket showing him at around 50 to 57% odds as of late January 2026. So Trump recently called him very impressive, and reports suggest a nomination could drop at any day soon, right? So what does it mean for Bitcoin holders, right? For us, what does it mean for us? So for us, this is a seriously bullish signal, right? So this is kind of like, with all of this happening, this is like the bullish hopium that I'm trying to bring for you guys. A dovish, crypto-friendly Fed chair from the world's largest asset manager could mean easier monetary policy, lower rates longer term, and less regulatory hostility, and definitely it will boost risk asset like Bitcoin, crypto, and everything. We've already seen global banks going all in on crypto, right? Like Bank of America, 4% allocation. Vanguard start to give their 50 million customers access to ETFs, more ETFs product coming in ongoingly, etc. So I think these are all good. I think if Rider gets the nod, it could accelerate mainstream acceptance, drive more inflows, and support higher prices in the next Bitcoin cycle. Not this one, but the next one. It's all I can say, right? It probably makes sense, right? So Rider comes in, Bitcoin gets to the bottom sometime towards end of year, and then with more of midterm stocks and shares goes up, and then eventually more of the gains will eventually have to go somewhere, right? So as long as there's no immediate quantitative tightening happening this year, and then continuously with easing onto next year, that's when the pump might come in, right? Where more money will probably get into Bitcoin and other cryptos, right? So it probably makes sense that this year will be the bottom for Bitcoin, the bear market. That's my view. That's my view, guys. So stay strong. Okay, and one last thing, one hopium of the day, hopium chart of the day that I want to bring you guys, right? So I'll try to stick this chart onto the video, like what I did yesterday. So before we jump in, let me set some context for the chart that I'm about to show you. Why I'm even talking about this chart, because this isn't really about Bitcoin price. However, this is about risk perception. So a lot of people tell me they like Bitcoin, they like crypto. Okay, just stick with Bitcoin for now. They like Bitcoin, they understand the long-term thesis, but they say they won't buy into Bitcoin because it's too risky or too volatile, right? At the same time, those very same individual already own tech stocks. That's through their pensions, ETFs, and retirement accounts, often without even realizing it, right? So what I want to show you today is a very simple, I want to compare Bitcoin's actual volatility with the assets people already hold, right? And ask a more honest questions. Is Bitcoin as risky as what each of you guys think? Or does it just feel risky because you guys are unfamiliar with Bitcoin, or your friends are unfamiliar with Bitcoin? So this chart does a great job of visualizing that gap. And once you see it, you kind of cannot unsee it anymore. So let's break it down. Okay, so this chart compares 30 days average volatility in 2025 across Bitcoin and some of the biggest technology names that very likely you guys already own. Tesla, Nvidia, Meta, Amazon, Google, Alphabet, Apple, right? So you look at the volatility numbers, right? Bitcoin roughly is about 40%, whereas Tesla is around 73% and Nvidia about 55%. And here's the kicker, over 62% of Americans already have exposure to Tesla and Nvidia, mostly without even realizing it, while only about 12% directly own Bitcoin. So most people are already holding assets that are more volatile than Bitcoin, but still say things like Bitcoin is too risky for me. So that's the contradiction, guys, right? Now, important to caveat, volatility is not the same as risk. Volatility just means price movement. Risk is about permanent loss of capital. And this is where context matters. Bitcoin, it trades 24/7. It's global asset with no circuit breaker, right? There's no kill switch. So stock trades limited hours with holds, bailouts from the government, and of course policy backstops. So of course Bitcoin looks more volatile sometimes because it's more honest, like being traded on a global exchange 24/7, right? So another consideration, these are short-term 30-day average. They don't tell the full story over 4, 8, or 10 years, right? So zoom out, and Bitcoin's long-term volatility has been compressing while its adoption keeps rising, right? And then you can see the volatility, especially when the ETFs, the institution starts to adopt it. The pullback from Bitcoin, it's actually been reduced tremendously, right? So here's my take, guys. As someone who holds Bitcoin, here's my take, right? I don't look at Bitcoin as a risk asset in isolation. I look at it as an insurance against monetary debasement and policy unstable or mistakes, right? So tech stock depends on earnings, valuations, central bank liquidity, government stability, and a lot of government policies, right? And Bitcoin only depends on a few things: the maths, the algorithm, the scarcity, the network effect on the demand and supply, right? So very different types of risk profiles. So what I find fascinating in all of this is people are comfortable holding volatile technology assets, tech stocks, because they're familiar, they heard about the brand, right? Not because they're safer, okay? However, Bitcoin feels risky because it's new, the individual hasn't read the Bitcoin standard books in a very in-depth manner, right? And and I'm not saying that sell your stocks and go all in onto Bitcoin. That's not what I want to get to, and that's not the purpose of my compound life either, right? What I'm saying is, if you already tolerate volatility through technology exposure, tech stocks, then having zero Bitcoin exposure isn't conservative, right? So I've made a video specifically to talk about exposure right now, and being like a Bitcoiner, I shouldn't just be looking at 4-year cycle anymore, but from the mindset of how do I extend exposure, because not having Bitcoin exposure, it's a blind spot for all of us, right? So for me, Bitcoin earns a place in the portfolio, not because it's calm, but because it's different. It's a very different beast to all of the other assets that you guys know of, right? It's kind of like a gold, but it's not gold. It's kind of like the Nvidia, the Tesla shares, but it's not really that either, right? So in a world where everything is correlated to policy decisions, this difference in terms of Bitcoin, it really does matter. Okay, so that's all I want to talk about this afternoon. So I just babbled too much. Let me know your thoughts. Always good to hear back from all of you guys. Let me know in the comment section. And then I'll see you in the next video. Hit the like, hit subscribe, and have a great day, guys. Market open Monday will be very, very exciting. I'll see you soon. Bye.